You're not losing because of the market, you're losing because you're entering trades with no system. Today, I'm going to show you a strategy that basically prevents you from pressing the button until the conditions line up perfectly. This setup doesn't run on hope, it runs on confirmation. And in a minute, we'll break down exactly how it identifies the market phase and why most trades simply miss this moment. If you get value from the video, I'd appreciate if you like the video and subscribe to the channel. I'm Steven, let's get started. First thing, let's get the workspace ready. I'm using classic candlesticks, time frame is 1 minute. Now go to the indicators tab and add Williams and RSI. We'll set up Williams first, set the period to 10, then go to style. For the main line, set width to 2, set the -20 line to red, width 2, and move opacity to the right. Then set the -80 line to green, width 2, and opacity to the right as well. Then save it. Then set up RCI, set the period to 5, then go to style, turn off the 50 line, set the main line to turquoise, width 2, set the 70 level to red, width 2, opacity to the right, then set the 30 level to green, width 2, and opacity to the right as well. Then save it. Alright, indicators are ready to go. If you trade from your phone, just set up everything the same way. And quick reminder, in my Telegram group, I post daily market analysis, key levels, and I also run auto copy trading. Entry is free, but spots are limited. Send me a message if you want to join. I'll see you there. Alright, take a look here. Right from the start, you can see the upside move starting to lose steam. Expiration is 2 minutes and I'm opening a sell trade for $74. Now let me walk you through how this setup works so the logic stays clean and structured. First thing I'm watching is Williams. The moment the turquoise line crosses the red level from above to below, that's the first signal the market may be shifting into a downside phase. The rally starts running out of momentum, seller pressure begins to build, and we can start forming the early structure of a downtrend. Next step, we check RCI. What I want to see is the same directional confirmation. In this case, the turquoise RCI line also crosses the red level from above to below. That tells me the downside momentum is supported, not random. The move lower has additional confirmation behind it, and when Williams and RCI align together pointing down, the picture becomes much more reliable. The bearish structure is forming, the continuation to the downside becomes the logical expectation. And there it is, logging in $68 in profit, clean trade. Let's keep moving. Now the market starts to shift its tone. Expiration 2 minutes and I'm opening a buy trade for $142. On the chart, you can see a steady upward structure starting to build. Candles tighten up, closes start printing higher, and the impulse gradually gains strength. The market stops chopping around and begins moving with more direction. Pullbacks stay short and controlled. They resolve quickly without breaking the overall structure. Each new low forms higher than the previous one, which tells me buyers are maintaining pressure. Price doesn't allow deep pullbacks, it keeps holding inside this rising channel structure, and at the same time the indicators fully support what we're seeing on the chart. Both point higher, confirming the development of bullish trend and reinforcing the direction of the move. And the trade closes out $130 in profit. Nice clean continuation here. Now we get a very strong impulse forming here. Expiration 2 minutes, and I'm opening a sell trade for $1,005. Price breaks through the nearby levels aggressively at first. We get extended candles, acceleration increases, and the rally looks strong and confident. At this stage, it almost feels like the impulse could just keep running on and on, but gradually the structure starts to overheat. New highs stop printing as easily as they did before. The speed of the move slows down, candles begin showing signs of exhaustion, the bullish inertia fades, and the market loses some of that stability. That's when direction begins to shift. Seller pressure starts building and the chart rotates into a downside phase. The indicators also line up here, both pointing lower and confirming the transition. In this kind of structure, continuation to the downside becomes the most logical scenario. Friend, by the way, if after watching the video you still have questions, feel free to reach out to me directly on Telegram. I'm always happy to help. And right on time, the correction comes in, locking in $925 in profit. Strong trade, let's keep going. Final signal of the session forms inside a clean bearish move. Timer 2 minutes, and I'm opening a buy trade for $1,930. Price has been stepping lower in very controlled way. Each new low settles below the previous one, and the structure looks organized and directional. Pullbacks do appear, but they stay shallow and temporary. They don't break the broader bearish structure. Sellers stay in control for most of the move, but as the impulse develops further, you start noticing something important. The pressure begins to fade. New lows aren't forming as confidently anymore. The speed of the decline slows down and the market starts to flatten out. That's often a sign the bearish energy is reaching its exhaustion phase. After that, the chart begins to reorganize. Early signs of a directional shift appear and the price gradually rotates into an upward phase. If that new upside impulse continues building strength, we can reasonably expect a strong bullish move to follow. And the trade closes out, locking in $1,776 in profit. Balance now sits at $3,707. Let's wrap this session up. Balance moved from $74 to $3,707. That's a solid result. If you have questions about the strategy or you want to dig deeper into how it works, feel free to reach out to me on Telegram. I'll be glad to help. Thanks a lot for watching, for liking the video and subscribing to the channel. Trade smart. See you next time.